Ladies and gentlemen, Assalamu alaikum. It's an absolute pleasure to be here and to representing Habib Bank on this auspicious summit. Just want to try and cover some of the listed debt capital market instruments and provide you a bit of an overview in terms of what is happening in the market. Yeah. So Vadaid Saab and Amir Saab have gladly sort of like laid the platform and sort of like built it up for me. So I'll not sort of like repeat the whole thing over and over. I'll just basically try and focus on the listed debt capital market instruments. Unfortunately, in Pakistan, the retail space has been literally absent from the debt capital markets. And that individual and the high net worth individuals in particular have been the focus of the retail or the listed debt capital markets. What is happening is that while there have been very few debt capital market issuances through private placements, there have literally been only 10 such issuances in 2023. And you will see that in terms of the listed issuances, there have been absolutely none. So what I will do is that in the next few slides, I'll try and cover the reasons why the listed debt capital markets has not been there and why we have not sort of like been able to come up with solutions to find in terms of the space. Before I do that, one of the very interesting things is that from a macroeconomic perspective, we find ourselves in an inverse yield curve scenario where the long-term issuance is priced at a yield which is significantly lower than the short-term, and hence it is significantly more attractive for people to be investing in short-term yields. The problem is with that when you talk about listed issuance, it's time-consuming, it's expensive in comparison to the private placement, and hence people generally would avoid going down that route. So why choose listed? And that's a very important question. And in my personal opinion, there are several reasons why companies and issuers need to start considering listing. And the specific advantages of that is, firstly, you will create an alternative investment opportunities. You will be able to move away from the banking sector and utilize your limits and your facilities a lot better in a more efficient way and create that additional capacity to borrow on your balance sheets. The second thing is that it also creates a confidence in the market, and you create a governance environment for yourself which helps you to further improve and enhance your rating. The moment you're listed, you're under the scrutiny and you're looking to improve your reporting, your governance principles, and it all helps. So the next slide essentially is what's holding us back, and what are the things that why is the take-up so low in the listed space, or actually not there? So the last listed issuance was probably 3-4 years back, in fact. And I think the principal reason has already been highlighted in a couple of presentations, that there are just so few investors in the market. They're just less than about 500 or 340,000 investors, retail investors who are actually part of the market. And hence, banking sector has to play a very active and an important role in terms of creating that additional capacity of retail and high net worth individuals who would be able to play an important role in terms of investment in the debt capital markets, especially on the listed space. The second major issue is the lack of liquidity. So given such few issuances, given the fact that the government securities are sometimes operating on a different platform to the corporates, it creates significantly lower liquidity, and hence the uptake is not there. Another very important aspect is perhaps it's also to do with the banks as well. They had been away from the whole process for almost about 4 years because of the regulatory change. I think they're now back and they're able to be the, sort of like the issuer for the instruments. So I think what is critical is that these banks need to be involved in the entire process. They would be able to undertake the appropriateness requirements, assess those, and include those investors and encourage them and provide them the necessary tools to undertake these sort of capital market issues. There are certain requirements which have already been discussed in terms of the delays and the time that it takes to actually get the listing done upfront. I think that has been another impediment in the entire process. And obviously the rating requirements is also quite critical, yeah. So what can potentially be done in order to overcome this particular space? I think one of the best things and one of the most important things is for the banks to actually be able to provide, with the help of the rest of the finance community, the necessary education and to provide the guidance to the potential investors in terms of the available debt capital market instruments, to provide them the risk associated with such investments, and to gear them up in order to be able to take these sort of like initiatives. The other part is on the part of the issuers. There has to be a mechanism which creates certain incentives for them to go for listed issuances. Fiscal incentives are quite critical. I think the other important part is that the government has actually been very active in the space and essentially financing the fiscal deficit. I think in certain ways what they need to do is encourage the state-owned entities to issue instruments, even if they are secured by government, but they need to be issued at that level in order to create significantly more space in the market. So I'll just basically, in the next slide, we will just basically talk about some of the major initiatives that HBL is undertaking in terms of development of certain new ideas, new thoughts, which can be actually quite critical in the development of bonds and the listed bonds in the space. So one of them is obviously looking at convertible options, providing the potential for a debt instrument to be converted into cash or equity over a period of time, and providing the sort of returns that a potential investor could be looking at, given the inverse yield scenario as well. The second is obviously the asset-backed securities. So right now, you can actually carve out certain pools of assets, identify what, and sort of like create through an SPV a structure which provides a significantly higher yield to the investors and creates a mechanism for issuance of those instruments. The third thing is the social impact bond, and we are actually quite actively involved with certain government institutions to develop these sort of instruments. These actually help us to create a niche for ourselves in terms of creating an impact where the goals are measurable and defined in terms of what the impact would be for those investment opportunities. The last is the green bond. HBL has been at the forefront of issuance of an international green bond, which was done for WABDA, the first of its kind for $500 million. Unfortunately, within the local domestic market, the uptake has not really been there up till now, but we're looking to develop in that space as well and go ahead. So thank you very much for your time, and really happy to be here. Thank you.